Ray Dalio is the man who said cash is trash 1 month before one of the biggest crashes ever. He's also the man who keeps on investing in China after 5 years of losses, but he's also the man who created the biggest hedge fund in the world with an asset under management of around $170 billion. Welcome back to a new video. I am the Italian investor and today we are talking about Ray Dalio and his hedge fund Bridgewater. Before we start, please remember to leave a like and subscribe to my YouTube channel if you're new. Thank you very much. Ray Dalio is idolized. We often hear YouTubers and analysts call him one of the best investors ever. But is it actually so? The short answer is not at all. He sucks. And I will tell you more. There is a high probability that you investing in a totally random way could beat him, could get a better performance than he's getting. Bridgewater's Pure Alpha Fund averaged a compound annual return of 1.5% per year from January 2012 to December 2022. That's a total 11-year return of 17.8%. In the meanwhile, the S&P 500 got an average annual return of 12.7%, with a total 11-year gain of 273%. Now Ray Dalio doesn't take care of Bridgewater's investments anymore. He has a new team, but he stopped handling Bridgewater's investments in 2020. Therefore, this historical performance is all his fault. So how is it possible that the biggest hedge fund in the world sucks so badly? And how is it possible that people keep on pouring money in this hedge fund? Let's start by answering the second question. Probably the reason why Bridgewater is so popular is Ray Dalio's fame. Indeed, he's always considered one of the best investors in the world. He is invited in every talk show, he's invited in CNBC, he's invited every year in Davos. He even publishes some viral articles on LinkedIn. He writes some amazing books, therefore his reputation is really high. We need to say that he's a great marketer. He sells himself very well. And we also need to say that he has a big knowledge of the investing world and of economy. But his performances are real bad. The problem is that no one ever questions him. I've never seen someone talking badly about Ray Dalio. No one ever asked him why his hedge fund is performing so badly. Therefore, the regular guy, normal people who don't study investments, think his reputation is enough to make him a great investor and keep on giving him money. And this, of course, is a really bad decision. But now let's try to understand where they are making the mistakes, because if this is the performance of the fund, probably they are doing something wrong. The first thing I believe they are getting wrong is that they always try to do market timing. They became famous during the great financial crisis because they were positioned very well. They made money during the financial crisis. And this was thanks to a good market timing. But then, in the next years, they weren't able to do so. Their market timing was very bad, actually. And to be honest, Bridgewater's portfolio seems to have been built by a child. It looks completely random. It surely is very hard to handle so much money. He surely can't invest in small cap stocks, so the size of the fund makes it really hard to stock pick. That's why they often buy ETFs. Indeed, the first two positions are two ETFs which are worth together 11% of the portfolio. The first one is on the S&P 500 while the second one is on emerging markets. And here comes Ray Dalio's obsession for China. He keeps on investing in China. Right now he actually reduced his positions big time and lost a lot of money in China, but he always talks in a very bullish way about China. And I think that in the past years, this was a huge drag to the performance of the fund. Now we reduced these positions. As you can see in the first ones, there are no Chinese stocks, there is only the emerging markets ETF. But for the rest, it looks like a randomly built portfolio. They have some ETFs and they have some small positions in big companies. Generating alpha with such a portfolio is gonna be basically impossible. You can't beat the market when you build a portfolio which is just like the market, perhaps even worse, based on the performance of the past. This is not how you generate alpha. So what's the lesson of this video? The lesson is that reputation isn't everything. You need to check What are the results of this person? Talking about investing, you always need to check out the performance, the past performance of the hedge funds you're interested in. Because in this game, all that matters is performance. Nothing more and nothing less. In the 1980s, Ray Dalio burnt an hedge fund. He lost all the money he was managing, and probably he got a shock from that, a trauma which he's taking ahead. And so right now he tries to build a fairly safe portfolio. He's buying ETFs, he's buying big companies like Google, Meta, Johnson & Johnson, Amazon. So it's gonna be hard to burn completely this hedge fund. But it's not going to generate alpha as well, so an ETF is gonna do a much better job than this portfolio. But I still advise you to read his books. They are great, they are very interesting and knowledgeable, so go read them. And that's it for today. Please let me know what you think about Ray Dalio. Remember to leave a like and subscribe to my YouTube channel if you're new. See you next time. Bye!